What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you guys had a wonderful day, my friends. Definitely a day filled with a good bit of opportunity. A little bit slow start on Monday, as we normally see these weeks, but the price action did take off near the end of the day for a nice little long winner. So, what I'm going to do today, my friends, is walk you through all the trades we took step by step and give you some analysis on the fibs and help to start teaching you the fibs from the basics. So if you're ready, my friends, let's step into the war zone. All right, let's do some shout outs and let's get right into it. Anthony, Trading Wars Army, what's going on, brother? Good to see you. Corey, Jamie, Gus, Joseph, Scratch, N7, Lead Farmer, what's going on, brother? Good to see you. Jay Villa, Briggs, Trading Wars Army, Calmeen, Trading Wars Army, what's going on, brother? Brother Calmeen, I sent you a message, brother. Check it out, all right? Chris, what's going on? Dex, Trading Wars Army. Todd, Trading Wars Army. Ernesto, Matthew, Heartstrong, Bill, Dan, Greg, Trading Wars Army. Hervin, Chad, CDP, Trading Wars Army. What's going on? Hillbilly Trader, what's going on? Good to see you. Top Value, Gazzy. All right, guys. So thanks for giving me your time, and let's get right into it. So the first thing we're going to do today is hit the replay. All right. So I'm going to go ahead and draw the previous day's high and the previous day's low. So why is that important? Well, that's important, guys, because what we're trying to do is we're trying to assess where we open, okay? Where we open is going to determine how we want to trade. So let's go ahead here and let's also get our triggers. So we had our trigger right here. Our long entry was 37366. So I'll go ahead and draw that in for you guys. Oop, that's the wrong one. Here we go. 377.98. There we go. So go ahead and draw that right here. Put this in green. And then we'll have our chart ready and marked up for the day. Okay. So we're ready. Let's let the first candle come in. Bam. Okay. So the first play that we took today, guys, was the long trigger. And so normally with the long trigger, we have a pretty decent size stop loss, but we filled it right at the open. And today, as soon as I saw, so we popped up just a little bit. And as soon as we started turning around, I went ahead and canceled the trade for a small loser. So let me just show you how that looks like on the 1 minute. So you can see on the 1 minute with the trigger, we opened below, we broke through, we got filled long. Then we had this little outside bar. And then once we started to come back down after this 1 minute, I went ahead and closed the position just for a very, very tiny loser, just because I wanted to see initial push right through, and that didn't happen. So I was trying to be tactical this morning, and I went ahead and canceled the long trigger after that quick turnaround. And you'll see later on how the long trigger acts as another area for a triple trigger entry, which I'll talk about at the end. But let's just go ahead, and I want to walk you through everything step by step. Okay, so you could see this was this morning. Be ready for the open. We might trigger, long trigger, target 1, 378.48. And then I said, I don't like the price action off the first candle here, guys. So this was at 933. So going to close the position for a tiny loss right now instead of waiting for a bigger one, swapping over to the fibs. So I went ahead right there, and I just made that choice because with the trigger, what I want to see, especially at the open, if it's going to fly, I want it to fly right away. Because if it doesn't, I can just re-enter the position a little bit later on. Okay, so if we go down and then we come back up, then I can look to re-enter, but I don't need to force it if it's not working at the open. So hit me with a 1 if that makes sense. So that was the first play of the day. Just a quick scratch. And then from there, I swapped right into the fibs, and the fibs really paid well today. So I'm going to walk you through the fib setup step by step. All right. So here is our first 5-minute bar. Keep an eye on this candle and this trigger, okay? Because this is going to come back into play later. So we had our first 5-minute bar. Next bar comes in, we make a new low. So after these two bars, guys, can we see a clear direction for the morning? Okay. Yes. So we can clearly see that there is a high and there is a low. So the market has pushed downward. So what we're going to do, we're going to take our Fibonacci tool. We're going to go from the high to the low like this. We're going to go ahead and put on the basic levels here. Right here. And what we're going to do is add our 50. because remember, we've been discussing the importance of the 50, how it's been really acting as a major resistance these days. So here's our 50, here's our 618. Next candle comes in, pops right back up to the 50. Okay. So normally, what I don't normally just take a trade right on the 50. I love to wait for the 618. But you could see, guys, we came basically pennies away from the 618. We were halfway there to the 618, and then we just created this inside bar. So the first setup of the day is using candlestick confirmation. So if you go ahead to the book here, candlestick confirmation can be found on page 48. So this is a perfect example of candlestick confirmation. So we get to the 50 and we put it in an inside bar. So what do you do instead? So you mark the high of the inside bar and mark the low. In this case, because this Fibonacci is to the downside, the only thing that I'm interested in doing is actually shorting this inside bar from a Fibonacci perspective. So we wait for our low to break right here, and we can keep the stop loss above this inside bar for protection. You can see the next candle came in, filled lower, and then made a new low. So that was a really nice quick trade off the open using candlestick confirmation. Pretty decent here. And then what I'm going to do here is I'm going to show you guys the power of the extension. So we're going to go back to the full fibs. And what I'm going to show you here, guys, is the power of the 272 extension. So you guys know that I love to use the 272 for opening range breakouts, and I love to use it for leg extensions, because the way that the algorithm is trading this Fibonacci is taking the pullback, getting the deal on the 50%, and selling at the 272 extension. This is a measured move completion. You'll see if you do some back testing, the power of the 272, very powerful. And then from there, guys, we run straight back up. Okay. So, oops, I went a little bit too fast. So let me just hit that replay again. Okay. So hit me with the 3 if you're following me so far. So just to recap, we had that first 50% Fibonacci retracement with the inside bar confirmation. That was the first play of the day from the fibs. I'll go ahead in the Discord right here and I'll show you guys that live setup. So this was that inside bar that I told you. We drew it up together. Or actually, is this, sorry, that's the wrong day, guys. Right here. Okay, so waiting for clear direction. There's your inside bar right there. Coming to the 50, looking like a great setup so far. So pretty good. Not nothing too crazy, right? Like not a huge move, but definitely good enough. So from there, the next leg we had was this full leg from high to low like this. I'm going to go ahead again and put it on the basic settings. And you'll see what happened here, guys, is we came right to the 618 and we did reject. Unfortunately, though, the rejection was not strong enough and we pushed right through. So this is a great example for just, for teaching that the 618 is not always going to work. The fib is not always going to work. Sometimes there is other algos that are stronger. And that's why you have to have a stop loss for protection. Okay. So in this case, the 618, we rejected for a little bit and then we just turned right around. So there was nothing we could do about that. But once we had that set up there and we made a new high, so notice that this high was broken by just a little bit. Then we went ahead and drew our next sequence, which is from this low to the high like here. Okay. So what we did here is we waited for the confirmation of that high breaking. Once that high broke, then we decided to draw the Fibonacci in the bullish direction, because now we're saying that there is a bullish algo. Okay. And it makes sense that there would be a bullish algo here, because remember, the bears shorted already in the morning right there. Okay. So let me just put the full on so you guys can see the synergy here. Okay. So the bear did this, push down, pull back to the 50 and trade it to its extension. So this bear algo is satisfied, okay, from that perspective of completing the move. The move that the bear is trying to do is make a new low, because when they short the retracement, they just want to get to a new low to hit some targets. And you could see, we could look at the price action and see it was completed at the 272. This doji candle came showing indecision. From there, now this bullish algorithm stepped in. If we look and zoom out on the chart, not only did we have that 272 extension completed, but we also had this gap fill. And remember what I taught you guys about gap fills, how important they are. So we came here, we filled the gap as well. So we had a lot of bullish confluence here. And once we broke this high over here, that's when we knew, all right, let's swap over to the bull side. Okay. And then from there, we waited here for the 618, came right there, and we got filled. And I'll just go ahead and show you my alerts. So right here, so I said trying long afternoon leg small size. Look, 618 looks good at 1027. So right there at 1025, that's when this touched the 618. We got filled. And then from there, guys, we pop right back up. It took a little bit of time, but we had that inside bar, then an outside bar. So this is the Nirvana. And then the last bar was a Ragnarok. So this also gave us a lot of confluence on the level, right? So again, this time we didn't wait for the candles. I just got in right on the 618. I was pretty confident that there would at least be a pop back up, but we also had the Ragnarok, which is a very rare pattern. Inside, outside, inside. Very, very rare. Okay. So what I did in this particular situation for me, I'll go back to the full settings, is my target was the 382, which is basically the opposite of the 618. Okay. So the 382 is the 618 on the other side. So I just wanted to get a quick pop from here back up to here for me. And that I got my target right there for 6 points. So 6 points on one contract is $300. I was pretty happy with that. But then you'll see later, we just exploded after. And a lot of people that just held their position and kept the original stop loss, which is the swing low, also made a lot of money too. But I just want to be fully transparent. I didn't take everything. And I could have, but you know, for me, I wanted to lock in some profits and end the day green. And I have a lot of size. So for me, it's important to scale out. So once I took off some at the 382, I put my stop loss to break even. And you'll see that this one came back to kill me a little bit, because after it touched the break even, popped right back up there, guys. And then we came down a little. So let me just go ahead and switch this back to the basics so you guys don't get confused. We popped right up. We came back down. We actually went all the way to the 786 right there, filled on there, and then we squeezed higher right after that. It's pretty nasty after that, guys. So you could see our analysis was correct with this bear leg completing and the bullish algorithm stepping in right here on this gap fill, and also with the 272 extension of the short. And you could see we even retested this level again, and then from there we just took off and went soaring into the sky. And don't forget about the V trigger, which was 377.98. So right there, you could see, let me just go ahead and show you guys this. So it took us some time. So 1, 2, 3, 4, 5. Finally, on the 5th time, we squeezed right through. But thankfully enough, for anybody that followed the trigger plan, our stop loss was 375.48, which did not get hit on the day. So if you're just fully trading this automated and you just kept your initial stop right there, let me just go ahead and update this 48, and I'll put this in red. There we go. And let me get rid of the fib. So anybody that was trading the fully automated, meaning they didn't touch the trigger, the 48 cents was a good stop loss because we made a low of 253. So saved by 6 cents, and then we exploded higher. All right. So there we go, my friend. So that was the recap for Monday. Like I said, just to start off, we started off with the long trigger, and I canceled it pretty early just because I saw this red candle come in. I didn't want to take a big loss. Then we had this 50% morning bear leg. This traded to the 272 extension, which lined up with this gap fill. And then from there, we squeezed higher. The afternoon leg was the big winner of the day. If I go from low to high right here, you could see we filled the 618 and we filled the 786 and squeezed into a new high. And the trigger finally hit the triple trigger finally hit. But again, if you had your stop loss using the plan we posted last night, you would have been fine. Did take a little bit of time though, so that's why it's important to have good stop losses. So all in all, you know, Monday, we were expecting it to be a little bit choppy, and you could see for the first part of the day, it was. Finally, we squeezed, and we can really see that we squeezed through this accumulation of Fibonacci in the bottom near this gap fill. And it's good when you can combine all of the scenarios together. So what do I mean by that? Well, first thing, understanding that the bear traded its leg. Second thing is understanding the gap fill. And then the third thing is understanding the afternoon leg, which was a 618 and 786. Both of those filled. That took us into the close. All right. All right. All right, guys, hit me with a 10. Hit me with the 10 if that made sense. And sorry if I'm cutting out a little bit because I keep muting my mic because I'm just coughing. In the nights, I start coughing a lot for some reason. Yeah, so I did not take an opening range breakout today because we were inside of the range. But obviously, if I look back, that opening range breakout was pretty solid if you guys did take that. But for me personally, I did not take the opening range breakout. All right, so not bad, you know. So this is kind of the first part of the Fibonacci series that I want to do, trading like a Fibonacci algorithm. And I think the main lesson for today is, if I remove everything, is just understanding completions, and what the goals of the algorithm is, the goal of the robot. What is the real goal? Well, the real goal is to pretty much trap retail. Okay. Hit me with a 5 if you guys agree with that. Do you think that the market makers, the algorithms, the robots, do you think they want to take your money? Hit me with a 1 if you agree. So let's talk a little bit about the psychology of the robot and the psychology of the market maker. So, what the market maker wants to do is trap traders, right? They want to put them in so much pain until they just give up and take all their money, right? This is the way the stock market works. It's a little bit unfortunate, but that's just the way the game is played. Just like in every game, there's going to be a winner and a loser. So if we go back here to this 50% retracement, right? What was the key here? The key was, so I'll go ahead and draw our fib right there. And let me just add the 272 here. So I'll go ahead here. I'll add the 50 and the 272. Where are you? Nope, that's the wrong one. This one. Okay. So remember, the understanding the first morning leg was probably the key for understanding the rest of the day, right? So we had our push down, and then when the bear loaded in on the 50, we got the inside bar confirmation. But what we're trying to do is make a new low, right? Like that's what the algorithm wants to do. And the algorithm wants to sell into new lows, because this part of the chart is where the retail goes to short, right? The retail doesn't trade based on risk to reward or based on good trading habits. They wait for FOMO. Okay. So after we have this sell off, pull back, and then when we start selling off again, this is when the retail will get in and they'll start shorting down here because they feel like the market is going to crash. They're going to miss it, right? And when the retail is shorting down here, this is when the algo is selling to the retail, and then the retail has to cover. So this is based on today's chart, right? So it's not 100%, like it's not every single time, right? Sometimes you're going to get a breakout. Sometimes you'll get a clean breakout, and like sometimes we'll crash and we'll just keep dropping, and the retail that chase will get rewarded. The point of the matter is this: if you chase, at some point you will get destroyed. You can guarantee that based on the math. If you have an inverted risk to reward and you're chasing pennies on the dollar, at some point you will get destroyed. And it happens all the time. And that's what I'm trying to teach you. Understand the psychology. So when we come down here on the 272 and we see this doji candle forming, you shouldn't feel the urge that, oh, I got a short, I missed it. Because if you're chasing down here, first of all, the put premiums are going to be extremely expensive. You already missed the move, and there's a high chance that we can reverse. And even if you do hit it one day and it crashes, guys, it's a bad habit to develop. Okay. So hit me with a 1 if that makes sense. So that's the lesson I want to leave you guys today. Understanding where are the sweet spots on the chart for you to enter. And it's always going to be on the pullback. Always. Even if we have a breakout, there could be a retest, right? Even if we break a level, there could be a retest. So it's not the best to chase. It's really not the best. All right. Okay. So there we go, my friends. Thank you very much for your time. So what we'll do now, let's do some scans for tomorrow. Let's just take a look at the market right now. So you could see we discussed this yesterday that we're still inside. So far, pretty bullish day to this inside week, but we have not broken out of the previous week's range. Okay, so pay attention to that. That's what we have to watch. And then right here at 6 o'clock, we opened and we pushed pretty strong over the last few hours, and now we're coming back down, and it looks like we are sitting on a 618. So let's see. So a little bit deeper here on the 786. So it's interesting to see how this leg plays out tonight, if this is going to be a dip buy or not. So this is going to be a nice little check here. So you could see the 50 was holding for a very long time, for literally for like 30 minutes. We were holding the 50 and then we finally broke down. And that's what you'll see with a lot with fibs. Even if they don't work, like let's say in this case, it just breaks down, but a lot of the times it will hold it. And that's that confirmation for you to see that, hey, you know what? It's trying, right? So the algorithm is trying. That gives you a better insight into the market. All right. Okay. So let's go ahead here and let's do some scans right now. Okay. So right here. So let's see what we have right here. So today we have, okay, let's start off with the blue raindrops. So we have Amazon, very, very powerful one. I love these blue raindrops. So Amazon is a hot pick going into tomorrow, guys. Not only is it a blue raindrop, but is an inside bar as well. Very similar to this inside bar, this one, this one. You could see the inside bars on Amazon generally lead to a lot of volatility. So Amazon is a big player tomorrow, okay? So make sure you go ahead and write that down for Amazon, okay? I'll post it in the Discord, and I'm going to post some free picks on the Twitter right after this. But Amazon is looking really, really nice for tomorrow. So Amazon, my number one pick for the blue raindrops. Let's go for the Holy Grail and see if there's anything. Progressive. I trade Progressive a lot. Really nice Holy Grail here. Target. Another one. Nice, tight Holy Grail. This looks like it's on a Fibonacci. That looks like a 618. Let's draw it up real quick. So this looks like a Holy Grail on the 618 for Target. So let's go ahead here. Low to high. Yep. So right around that 618, you could see that we're holding the level with the Holy Grail. That's a very good setup. Chipotle Mexican Grill. Very nice one as well. This name, nice Holy Grail, and pretty close to the gap fill. So this is a really interesting point for Chipotle. So nice one to look at tomorrow. Let's see if there's any Nirvanas. Okay, so no Nirvana. So guys, lot of nice hot picks going into tomorrow. So I'm going to post them on the Discord. I'm going to post them on the Twitter. Thank you very much, guys. As always, check me out at tradingwars.com. If you buy any one of our 3 books, you get 1 month for free. Come trade with us live tomorrow. You get the indicators for life, one-time charge. And right here, guys, everything I talked about in the fibs is explained in a lot of detail in the book, and over 50 charts, over I think like 50 something charts, guys, in the book to really, really help sink home the point. Or you can sign up right here on the main page. So today, part 1 on this Fibonacci class was really about measured moves and understanding them and what it means. And then what we're going to do is we're going to continue these lessons throughout the week, as long as you guys are enjoying them. If it's a little bit too intense for you guys, that's fine. I can dial it back a little bit. So just let me know in the comments. Did you enjoy part 1? Was it good? Should I continue like this? Is it too complicated? Let me know how you feel about it. I'm happy to take a step back or take a step forward if we need to. All right, guys, have a great day, and I'll see you tomorrow. And let's get that paper. Thank you.